Natural gas futures were marginally higher in early trading Friday as the market continued to count balances following a larger-than-expected storage withdrawal and as forecasts hinted at colder temperatures developing later this month. On a weather-adjusted basis, analysts estimate the market was less than 1 billion cubic feet per day undersupplied as freeze-offs trimmed production, and total degree days came in stronger than norms while hitting year-to-date highs. Over the past week, recovering production and declining weather-driven demand expectations have continued to put downward pressure on Henry Hub prices. Since last week, supply has rebounded, with production in the 99 to 100 billion cubic feet per day range in recent days, after dipping below 97 billion cubic feet per day last week and averaging around 100 billion cubic feet per day through January. This comes as Associated Basins added 0.7 billion cubic feet per day week on the back of the further recovery in the Permian Basin. Meanwhile, the U.S. has experienced 8% fewer heating degree days than usual, according to the latest weather data. As a result, natural gas inventories have risen, and the EIA expects them to remain above average through the summer. Meanwhile, Freeport's restart has kept a floor under the prices as investors hoped for more pull-in in the coming weeks after the facility sent gas to one of 3 liquefaction trains to turn it into LNG for export. Meanwhile, overnight forecast trends were mixed, with the American model trending slightly warmer, but the European dataset shifting colder by a few degree days. They match up well and maintain light to very light demand for the next 8 days, stronger demand February 17 to 19, then back to lighter demand February 20 to 23. However, models also tease the potential for a colder U.S. pattern February 24 to 28 as frigid air over western Canada tries to advance into the U.S. The primary risk over the weekend break is the weather data trends colder with the setup February 24 to 28 for a finally frosty enough pattern to satisfy. This comes as recent longer-range forecasting raised the possibility of colder temperatures for the United States between the last week of February and the first half of March. The weather data is finally teasing the potential for a cold enough pattern that could last more than just a couple of days. However, markets are likely to remain skeptical, considering cold weather patterns have consistently disappointed this winter.